Really important to understand as well. So a mixed cost is basically a cost that contains both the fixed component and the variable component, right? So I'm going to make an example with an electricity bill. Let's say in your area, basically ESCOM or whichever electricity provider, they charge you a certain monthly fixed amount to be connected to the grid, right? Let's say they charge you, I'll just say they charge you 1,000 rand. So they charge you a fixed 1,000 rand to be connected to the grid, just to be connected to the grid. So whether you use electricity for that month or you don't use electricity for that month, as long as you're connected to the grid, you have to pay 1,000 rand, right? So that's a fixed cost. That's the fixed component of the cost. However, on top of that fixed monthly charge, they also charge you a cost per kilowatt used, right? So the more electricity you use, there's a specific cost per kilowatt that you pay. So there's a variable component to it. To say as activity, as the kilowatts, this is activity. So in terms of kilowatts. So if you produce zero, you pay that fixed 1,000 rand to be connected to the grid. But once you produce more, once you start producing more, the cost goes up because you need to pay this variable component, which is the cost per kilowatt. So that's the idea of mixed cost, to say they mixed, they have a fixed component and a variable component.